This is the Savvy Investor radio show and podcast. For help with your retirement, schedule a 15-minute phone conversation with the team at ProStatus Financial Advisors today. Just call 866-597-1040 and at thesavvyinvestorradio.com.
Thanks again for joining us here on the Savvy Investor YouTube channel. This episode, we're going to look at the Santa Claus rally and what that means to you. My name is Mike Macho here with Ryan Herbert. Ryan is a financial and tax planner and 5-star wealth management award winner at ProStatus Financial Advisors Group. Ryan, talking about the Santa Claus rally here at the end of the year, the stock market often sees a lift. Some believe that this year's boost will be bigger based on a lot of things that we're going to hear from right now from a market analyst on Fox Business. Take a listen to this.
The 5 days in between Christmas and New Year's and maybe the first couple days into the next year, that's the Santa Claus rally time that we all talk about. And about 75 to 80% of the time, that market goes up in a normal period, 1.65%. If there's a change in president, that goes up to 1.85%. But you know what? It's going to start earlier, and it might even be stronger because we have had this piano taken off our backs.
So, Ryan, do you agree with that? And before you get into that, explain to us a little bit more what is exactly the Santa Claus rally.
Well, the Santa Claus rally really is basically, the effect of Santa Claus coming to town. Santa Claus basically grabs the market and pulls the market up with him as he, travels across the world. And normally it's the period between Christmas and New Year's where, Scott's talking about, the stock market normally does whatever percentage. And then when it's 60% of the time, it works every time, kind of like that Anchorman quote.
Sure.
Whenever it's a presidential, a new president, the market goes up, and it kind of all comes down to, basically looking at the stock market and looking at history. And obviously past performance doesn't guarantee future results. It's not something that happens every single time, but normally, the stock market does perform well between Christmas and New Year's. And then it starts to die off after that. And, historically speaking, anytime we have a change in political party in the White House, whether it's, going from Democrat to Republican or Republican to Democrat, does not matter which way it goes. As long as there's a change in party, the stock market usually performs well from election day to about mid-January before it rolls over and dies. It happened when we went from Bush to Obama, from Obama to Trump, from Trump to Biden. And now we're seeing it again from Biden back to Trump. And it's really a matter of, if you're into market timing, it's something you should pay attention to, where, I'm playing with stocks, I'm playing with bonds. I like to do my investing myself. I'm going to push more money on the aggressive side of the table to take advantage of, this potential upside that can happen. But there is that downside. But, whenever you look at history and you're trying to do things like this based on, what happens in history, sometimes you miss. And the biggest point about having a plan for retirement, having a successful financial plan when it comes to the stock market is, it doesn't matter if you don't get all the high points in the market. As long as you miss those low points, that's really what matters. If you just get that middle part of the stock market because you have a plan in place and you stick to that plan. Yeah, occasionally you can vary, all right, Ryan, I want to take $10,000 and put it in NVIDIA stock because it's doing really well. Or I want to put it in super micro devices because it's doing really well. Or, whatever the stock happens to be, yeah, that can work out. But then in the same aspect of, I want to take money and put it into Fisker automobiles because they're the new up and coming electric car maker and they go belly up. Well, that's what can happen. You don't want to have these short-term impacts, these short-term moves in the market. You don't want to base your entire retirement plan on these types of things. You want to make sure that your plan can account for them, can adapt to absorb some of these rallies, but most importantly, that it's around that your plan has protections in place to make sure that you're missing those downsides of the market, making sure you have those protectionary measures in place. That's really what retirement planning is about.
And if you want to do that, you can click on the link in the description below to schedule a complimentary personalized review of your portfolio of what you have right now to see if you need to make any moves. It's complimentary, no obligation. Again, you can do that as a Savvy Investor YouTube viewer. You can click on the link below on the description there, and that'll get you to Mike and Ryan. And you guys can have these conversations that we're having here and continue them. But for our viewers right now that are hearing this and think, okay, 1.85% increase for this Santa Claus rally on average when there is a new president coming in like we're seeing this year, what do you tell them? Should they get excited right now and just get aggressive with things, or what are your thoughts? What do you say to them?
What we always talk about when we talk about risk versus reward is, the reward that you can possibly get out of this, like you said, is about 1.85%. But if you are 100% in the market, I would bet to wager your downside's probably in excess of 5 to 10%. So is it worth it to you for the short term? Is it worth it to you? I want to try and risk all my money, my nest egg, my $100,000, my $500,000, my $1 million. I want to risk all of that money to potentially earn 1.85%. But if I'm wrong, I could lose 5, maybe even 10% in a normal market swing where the stock market's going up 1 or 5% over the course of a week. Is that the most important thing to you? And when we were at the end of October and we were up against the debt ceiling, and when we're coming into the election season, what Mike and I were talking about with our clients is, hey, if things go sideways, we're going to pull money out of the market. We're going to pull the portfolios out of the market and sit on the sidelines because we don't think it's worth missing out. We don't think it's worth, risking 10 to 15% of your money just for that potential 2% that we might miss out on staying in the upside. It's all about having a plan in retirement, having a plan that accounts for the ups and downs of the market. And if you want to find out more about how these plans can apply to you, what retirement really could look like for you, I encourage you to click on the link in the description below to go to our website and schedule your own complimentary consultation to sit down with Mike, myself, and our team here at ProStatus. And don't forget to like and subscribe to the channel while you're there.
So if I'm hearing you right, don't get excited about the Santa Claus. Well, get excited about the Santa Claus rally, but unless you are a do-it-yourselfer and have some play money that you're playing with, go see somebody who knows what they're doing.
Yeah, it's not, you can get excited. You should be excited this time of year. It's Christmas time. Everybody's happy, or at least in theory, everyone's supposed to be happy. There's always those people that are Grinches.
Till you get the bill. Well, yeah, till you get the bill. After.
You get the bill. I haven't even looked at what my credit card looks like, and I know Amazon is showing up every single day with presents. And that's kind of part of what drives the Santa Claus rally is people are spending a lot of money this time of year. So in theory, it should be a good time for retailers. It should be a good time for the economy. But, if those numbers come back lower than expected, just because you got this 1.8% on the upside, come January, February, when those numbers are released and, they were supposed to be 150 million, but it only came back as 120 million. Well, that calls a pullback in the market. And then you lose all that money that you put, that you pushed in there. It's all about having a plan and sticking to that plan.
I've got a theory. The Santa Claus rally really is year round because Santa Claus comes to my house every day pretty much. And his sleigh is blue.
My guy, it's brown. His name is Dan, and he's a very, very friendly guy. That's our Santa Claus.
Oh man. The Amazon guy, man. He's at my house a lot. Thanks again, man. Appreciate that. We got to wrap things up for this episode here, talking about the Santa Claus rally. If you have any questions, if you want to know more about your retirement, as Ryan has suggested, just click on the link below there and schedule a complimentary personalized review. And you can do that starting today. Do that right now. Thanks again for your time, for watching us, Ryan. But as always, you get the final word. You get us out of here.
This is Ryan Herbert. Thank you so much for watching the Savvy Investor YouTube channel. Don't forget to like and subscribe, and we will see you, the Savvy Investor, next time.
Advice Advisory services offered through ProStatus Financial Advisors Group, a registered investment advisor. Insurance licensed in Maryland. ProStatus Financial Advisors Group, LLC is not licensed in all 50 states. To find out if ProStatus Financial Advisors Group is licensed in your state, please call 410-863-1040. ProStatus Group, LLC is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through representatives of ProStatus Financial Advisors Group.